Hello and welcome to the new lecture from the Inner Circle Scorpio. Today we are talking about trading sessions and ICT kill zones. So after learning about how to look at different charts um, and different markets, how chart patterns, price patterns are made and all that, we need to know the next most important thing, which is time, and to know when the market is open. The trading market is open 24 hours, 5 days a week. Not talking about crypto, I'm talking about indices and forex market, okay? The bonds and all that. So there are three major trading sessions that are running one after another. So that makes it 24 hours. Some people can argue it's not 24 hours. It's just that there is a small break between 4:30 to 6 p.m. Eastern time, during which all the indices and the forex market is stopped. But there is a trading that started right at 6 p.m. again. We have to know that, as we discussed before, that these prices are delivered by an algorithm based on price and time, and that time that the algorithm uses is the New York time, which is also known as the Eastern time zone. So Tokyo, London, and New York. There is another market, Sydney, which also comes between New York and Tokyo, but we don't talk about it because we generally don't trade that session. The only important session to us is London and New York. We'll talk about Asia session as well, which is in Tokyo. Tokyo is in Asia. So because Asia sets the stage for London and New York, and we'll talk about that later. The trading market opens at 7 p.m. Eastern time. This is talking about winter time. 7 p.m. Eastern time. It closes at 4 a.m. Eastern time the next day. This is Asia session. Then we have London session, which opens at 3 a.m. Eastern time, closes at 12 p.m. Eastern time the next day. And then we have over session, which is New York session, 8 a.m. to 5 p.m. As you can see, they are overlapping on each other. Even though this is starting at 3, this ends at 4. And this started at 8, but the previous session stopped at 12. So they overlap over each other. This goes from November to March, roughly, and this time is used in winter months. Now we also have summer months, of course, from March to November, in which the Asia session starts at 8 p.m., closes at 5 a.m., and London session is from 4 to 1, and New York is from 9 to 6. This is our standard time that we usually use all the time. Now, this is a huge time, like this is almost 24 hours. We cannot be on the charts in all of these hours. So based on that, ICT founded certain times which he called kill zones. He called those specific time windows as kill zones, and he said that if you are on the charts at that moment of time, you can find a good trade. So he had this for forex and for indices. So we'll talk about forex first, where he says that for Asia, you have to be in front of the charts from 8 p.m. to 12 a.m. All of this time, you can see some trade in between that time. But his most of his trades are in London and New York. He rarely trades in Asia. Many people don't trade in Asia because we use Asia to see what will happen in London, and we see London to see what will happen in New York. And then he says that for London, we have 3 hours from 2 a.m. to 5 a.m. Eastern time. For New York morning session, we have 7 a.m. to 10 a.m., 3 hours again. And then we have London close session, which is from 10 a.m. to 12 p.m. Now, you don't have to be on the charts for all of these times. It just means that if you have time for London close session, you can come on the charts 10-15 minutes earlier and see if you can find a trade in this time. Same goes for this area. If you have time during this time period, Eastern time, you can come on trade and find a setup. Again, Same for London and Asia. Now, I trade indices, so I will talk about indices time. Asia session, kill zones are from 8 p.m. to 12 a.m. and London kill zone is 2 to 5, New York is 8:30 to 11. And then in indices we have a PM session as well, which starts from 1:30 to 4 p.m. Again, I need to mention that you don't have to be in front of charts during all of this time, but for your study you can go back in time and see what happened at 2 a.m. in London session, what happened at 8:30 to 11 a.m. on AM session. You can look what happened at PM session from 1:30 to 4, but you don't have to take trades in all of them, right? You have to select one or maybe two sessions that align with your time and your priorities, and you can go ahead and take trades in that time. Now, ICT dropped down the time of trading from 24 hours to at least a 3 hour window for each session, right? So you can easily find out time to trade. He also find a really good thing called macros, which will further reduce the time of trade, which is, we'll talk about it next. But first, I want to give you an example of the chart for all the kill zones. This is a recent example from 3rd October, where from Thursday, 2nd October 2025, 8 p.m. Asia sessions starts, ends at 12 a.m. Then we have a small window, and then at 2 a.m. we have London kill zone, and then we have at 5 it ends. After London session, we go up, take out the London liquidity, we go down, retrace a little bit at 8:30, and then we drop before 11 a.m. Then we have a little bit of time. ICT calls it the lunch session. This is not my session of interest, so I don't look at it. And then at 1:30 we have the PM session that starts. So in this PM session, and then at around 4:30 the market stops. So these are the kill zones. Important times. Further important times that I would like to mention is that most of the time at 8:30 there are news releases that we have to look at, because if there is any consolidation on charts before 8:30, 8:30 will manipulate, and if there was already a manipulation before 8:30, then 8:30 will distribute. So based on those profiles, we have to know that there is a news release at 8:30 or not. 9:30, the New York equities market open, and whenever this time happens, there's a lot of volume coming in, so this is a good time to trade. We have also news releases at 10 a.m. So 10 a.m. news releases are really good, because when 9:30 equity opens, we have a lot of volume coming in. We can see if there is any distribution or manipulation or consolidation happening, and then at 10 a.m. news, we can actually frame over trade. So 10 a.m. news are kind of my favorite. And then another time is at 3 a.m. Eastern time. There is the London stock market open time. That also brings in a lot of volume, so you can also expect speed and velocity during London session as well. Now, ICT introduced another concept called macros, and he says that ICT says that the macros are small windows during kill zone times in which you can place your trade or your entries, right? What are macros? Macros are made by taking 15 minutes each from the previous hour and the next hour, right? This is important because we have when we have overdrawn liquidity, we know where the chart is going, we can open a trade during that macro window. And during this time, ICT says that if there is no manual intervention and if the chart is planning to move, it will move during that macro time. He also says that if there is consolidation during that macro time, that means there nothing will happen in the next hour. So as you can see, in London starts from 2 to 5, right? So we have a macro window right in the start from 1:45 a.m. to 2:15 a.m. and then the next hour is 3. So we start from 2:45 to 3:15 a.m. The last hour is 5, so at 4 we have 3:45 to 4:15 a.m. Same for New York. ICT does not trade Asia, so that's why he never mentioned Asian macro windows, but this same thing applies to Asia as well. In New York, we have 8:45 to 9:15. We have 9:45 to 10:15. This is my favorite time. I trade in this time. And then 10:45 to 11:15. It's very rare that I trade in this time. And then we have 1:45 to 2:15 and 2:45 to 3:15. See, originally ICT said that it's a 20-minute window, which would be 8:50 to 9:10. But since I also follow Zusi, his student, he said that adding 5 extra minutes to these macro windows is good so that we can catch the moves beforehand, before it's happening. So I went ahead and considered 15 minutes before and after the hour as a macro window. Now let's take an example from the New York AM Killzone, where the first macro window is this 8:45 to 9:15, where we find one trade here, which is we see a low make, a high, a low, and a high, which is a market structure shift. We have a fair value gap, and then when we enter, by the next macro we have taken over. Before the next macro we have taken over buy side. Now 9:30 equity opens over here. That's why it pumped up. It made a lower move, an upper move, a lower move again, and then when it went up. Now at this point we have taken the buy side liquidity, so if you already have your draw clear, you will look for shorts. If it is going up, we wait for this soup. There is a concept on ICT that there should be a fair value gap somewhere here, and there should be a high made in that fair value gap, and when we go take that high and tap that fair value gap and return, which makes a turtle soup. We'll talk about it in depth later. So here at 9:45 we are looking for a reversal. We took out this high, we made a market structure shift over here, see that bulb, and as soon as we tap back into it we can enter, and then we can target the sell side liquidity. So we found a setup at 8:45 to 9:15 and 9:45 to 10:15, and during this macro we consolidated and did not find any setup. Here we have London Killzone, in which is the same example from here. This London at October 3rd. See, October 3rd. So Friday, October 3rd, 1:45 to 2:15, we saw that Asia high was taken already, but we haven't seen any reversal after that. But here we had a market structure shift. We made a low, we made a high, we made a low, we made a lower high and lower low, which makes this as a mitigation block. Market structure shift, we enter on it, we can target the sell side, and then in the next macro we starts from, you could have taken this trade, or if you were late, you came on the chart at 2 or 5 minutes before 2, you could have taken a long over here, which would be this one in the macro time 2:15. It's not hard and fast rule that you only have to take it before here. It can be in the middle, or maybe the chart starts delivering halfway through the macro like it did here. In the first half it moved down, in the second half it moved up. So we only made a low, and then the only high we made was this, and then we made a low. The next high broke through it aggressively. We made a market structure shift again. We have a volume imbalance over here. We haven't talked about this, we'll talk about this later, but we have an inverse fair value gap over here. The concept of inverse fair value gap is that we talked about that if there is a fair value gap, the market will go back into it, right? We talked about that. But if the market does not respect it and go above it, this becomes an inverse fair value gap. So now, before it was resistance, and now it will work as support. See, the chart came back into this fair value gap one more time and went up. So we could have entered over here and then target the buy side that was created before. Now, here's the funny thing that we talk about. Now the chart went up here and stopped. Now this is a retailer's resistance. It went down. Okay, it went down over here into our new macro. We can see that it stopped right before this high. We could enter at this macro as soon as it opens right about here, and we can target the buy side. It would be a smaller trade, but a win is a win, and at that time it takes the buy side liquidity. But after that we did not see any trade. It just consolidates. Okay, so this is the same PM session for the New York PM session at 1:30 to 4. This is our session of interest. At 1:45 we are going down. We are inside an important key level where we anticipate a reversal. We see a low made, we make a high, we make a low, we make a higher high, which is a market structure shift. We could have entered at this fair value gap after that, or this breaker block. This is a mitigation block after that, and target the buy side, the nearest buy side here. Always remember, you should always target the low hanging fruits, which is the nearest high or the nearest low, because the charts can reverse at any time. As you can see here, we could have anticipated that it will take this high, but it did not. It just reversed. So always take your partials. We'll talk about risk management in the later stage, but we target this high in this macro. So in this macro time, we had two opportunities, this short and this long again. And then after that, we saw no opportunity. Now I will talk about my session of interest. Um, I always come on charts at 9:15, and my session of interest is 9:30 to 11 a.m. We know ICT Killzone is from 8:30 to 11 a.m. He divides them in two 90-minute sessions from 8:30 to 10 and 10 to 11:30. But I am in front of the charts during this time, 9:30 a.m. to 11 a.m. Why? Because at 9:30 US market equity opens and we have a lot of trading volume coming in. So we have chart moving in fast. If we are right, we get our money quick. If we are wrong, we lose the money quick. So you don't have to stay on the charts for a long time. And as I told you, that most news releases are at 10 a.m., some at 9:45, but 10 a.m. is mostly the news driver. In that session, we have a lot of news, so that also injects a lot of volatility in the chart, so we can target our draws on liquidity quicker. And it matches my lifestyle. See, this is the most important thing. It matches my lifestyle because I go to work, I have a job, I'm a software engineer, and I work in Pacific time, right? The Pacific time is 3 hours behind the Eastern time. So I can easily wake up in the morning. My 6 a.m. is 9 a.m. in Eastern time. So I can just take a trade in the morning and then go to my work. So this matches my lifestyle, which is the most important thing. It does not disturb my day-to-day life. I go to work, come back, do some journaling, go back to sleep, wake up, and then take a trade. Final notes. We talked about market sessions. We have three major market sessions, which is an Asia or Tokyo session. We have London session, European session, and then we have New York session, which is like the North America session. We talked how ICT kill zones reduce the time of trading in which we have to be in front of the charts. And then we talked about macros, which are the most important time windows during those kill zones. So we just have to be present in front of charts to take a trade in this time period. So we have to be in front of the charts in the kill zone time to get an idea of where the chart is going, and then we execute during the macro time. Now, for homework, I would like you guys to go on different charts like NQ, ES, Gold, Bitcoin, whatever chart you like, and label your session of interest. Like, for example, your time, you're free during London session, so just label that session, right? and then label the macro in that session. Now read the chart how it goes and see if you could have saw any potential trade in that time. Find 10 examples for that. I would suggest find 10 examples in London, in New York AM and New York PM, which would be a good um, way practice for you guys. But whichever session you want to go ahead. And this brings our lecture to an end. It was pretty quick from the previous ones, 20 minutes. We wrapped it up quickly because we just talked about market sessions at the time. Now, since I have talked about market sessions and price delivery, we'll talk about how we can utilize these prices and times, and we will talk about price and time cycles of how they impact each other. Like I said, that Asia sets the stage for London, London sets the stage for New York. What do I mean by that? So we'll talk about that in the next lecture. Thank you. I hope you found this insightful, and I'll see you in the next lecture. Good day, good trading.